Tonight's Market Monitor has an upbeat outlook for the market overall, as well as for some specific stocks. Let's welcome Mark Luschini. He's Chief Investment Strategist at Janney Montgomery Scott. Mark, welcome back.
Thanks,
why
Tyler.
are you as sort of constructive on equities as you are, and what do you think the second half of the year is going to look like?
Well, I think the second half of the year is going to look better than the first half, Tyler. I think that we're going to see a capital spending uptick. We're already seeing that in core capital goods orders activity that have been increasing sequentially now for 3 consecutive months. We look for the housing market recovery to continue on over the course of the remainder of the year. And finally, the consumer deleveraging process is advanced. We're seeing some job growth, and we think that collectively is going to lead to accelerating economic growth out over the back end of the year. And I think that bodes well for risk assets, namely stocks.
All right. Speaking of stocks, we have some viewer questions for you tonight, Mark. Jenny of Minnesota writes in and said, I bought 300 shares of Apple last year at about $600 per share. Do you think I should sell Apple at this price or hold on for a higher price later? What do you think?
I think sushi should hold on for a higher price later. Unfortunately, that $600 plus is a sunk cost at this juncture. But the fact of the matter is, Apple's still an iconic brand. It's generating over $15 billion of free cash flow a quarter, pays today at today's price, a 2.9% dividend yield, and we're in kind of a dearth in between their product cycle at the moment, so I would wait to see what they might be launching this fall, which could grab some sponsorship back into their share price and drive it higher before you're willing to part with it.
All right, let's talk about a company that is sort of related, at least it's in the phone business. Alexis from El Paso wants to know, how does the outlook for the Vodafone group look over the next year?
We think pretty good, Tyler. Vodafone, obviously a global wireless carrier, developing activity for its businesses in both emerging market countries and as well developed markets. The stock pays a 7% dividend yield, which is exceedingly handsome and obviously gets you a long way towards realizing an impressive total return. Plus, it owns about 49% of the Verizon wireless footprint here in the United States, which is a lucrative proposition. And there's increasing talk that perhaps Verizon is going to either buy them out or do something in a way to pay them a huge dividend as a consequence of their ownership stake. So I would hold on to Vodafone.
All right. Next, it's David from Blue Hill, Maine, writes in and asks, as a long-term holder of Intel, I would appreciate a discussion of the company's future prospects competing in markets such as mobile rather than PCs. What do you think? Do they have what it takes there?
So we think so. I mean, Intel, again, is an iconic franchise, a moat business, if you will, given all the industries that's impacted by its chip-making capacity. Obviously, it's stumbled here of recent, particularly being rather slow in making the transition of supporting PC sales, that is, to smartphones and other tablet-like devices. But we think they'll get it. And in the meantime, you get nearly a 4% dividend yield at today's price. The stock seems relatively cheap at about 11 times forward earnings, so it has valuation support, and again, is a cash cow. So we continue to think the longer term prospects for Intel look very attractive.
Let's get to a couple of your picks, kind of bonus time now. 2 stocks that you like. We got about 45 seconds left, so 20 seconds apiece on PNC and Helmerich & Payne. Why do you like them each?
PNC is a recovery on 2 things, a recovery story on 2 things, really. The housing market, and it has a big footprint in the Southeast, which is a growing populous area. In addition, obviously a recovery in distressed sales, particularly in the Floridian marketplace, and as well the domestic recovery. So it's a 1-2 punch that we think is going to be profitable for PNC. And obviously, as it relates to Helmerich & Payne, here's a company in North America, has a state-of-the-art oil rig portfolio, active in the Bakken Shale, and has impressive day rates. And we think, again, very strongly about the long-term prospects for the energy renaissance of the United States, which we think HP is going to be a benefactor of.
Any disclosures on those last 2, Mark?
We own them all for clients, Tyler.
All right, fantastic. Mark Luschini, have a great weekend.
Thank you. You the same.
Mark is with Janney Montgomery Scott.